All right, just a quick heads up before we dive in. Everything we're about to cover is for educational purposes only. This is not financial advice.
So, something pretty remarkable just happened. The PLAZM protocol went through its biggest stress test to date, and the outcome was the exact opposite of what you might expect. Instead of draining its treasury vault, the pressure actually fueled a massive growth spurt. Today, we're going to dig into how its core engine, the Flywheel, didn't just survive this test, it absolutely thrived.
Let's just get right to the headline number, 30%. That's how much the PLAZM Vault grew. And in dollar terms, well, we're talking about nearly $120,000 in new assets hitting the treasury. That's a huge number on its own, but it's when this happened that makes the story truly incredible.
Because, this growth didn't happen during some quiet, easygoing bull run. No, this all went down in just 2 weeks, during a period that was specifically designed to push the protocol to its absolute limits, a stress test that was supposed to drain the vault, not fill it to the brim.
So let's dig into our first section and really look at this surprising result. How the vault didn't just hang on, it actually blasted off to a new all-time high. I mean, just look at this chart. It really tells the whole story. In just 14 days, the vault shot up from an already healthy $398,000 to over $500,000. That 30% jump happened right when a lot of people were expecting a pretty big drawdown. This is the flywheel effect in real time.
Which, of course, brings us to the central question of this whole explainer. How on earth did this happen? How did a period of intense pressure, one designed to test the protocol's defenses, actually turn into a massive accumulation event for its core treasury?
Well, the answer lies in a core mechanic of the protocol, what we're calling the flywheel engine. So let's break down exactly how this engine so brilliantly turns that stress into strength.
Now, what's really cool here is just how elegant and simple this is. It's a powerful 4-step process. See, it all starts when a user decides to stake their PLAZM. That one action triggers a flow of ETH that goes directly into the protocol's treasury. And here's the absolute key. 100% of that ETH is immediately used to buy DexFi bonds. You can think of these bonds as little engines that generate real income. So the more bonds the treasury holds, the bigger and stronger the vault gets. It's a direct conversion of user confidence into a permanent, growing asset base.
And you can see the results of that engine running hot right here. During those 14 days, the number of these income-generating bonds in the vault jumped by over 1,000. That's over 1,000 new, permanent, yield-generating assets added in just 2 weeks.
And the thing is, the engine isn't just running, it's accelerating. You can see it so clearly here. In the 10 days leading up to the stress event, the protocol was stacking about 50 bonds a day. Then, bam, the staking surge hits on day 94. And look what happens right after. The rate doubles to over 100 bonds per day. This is the flywheel responding directly to user action, turning a surge in staking into a surge in asset accumulation.
This rapid accumulation isn't just about growing the vault's dollar value, though. It's about building a dominant position within the broader DeFi ecosystem, and that gives PLAZM a serious strategic advantage.
Check this out. The PLAZM protocol now owns over a quarter of all DexFi bonds in existence. That is a massive stake. Think about what that really means. A huge chunk of all the revenue generated by that external protocol flows directly into PLAZM's treasury.
And that share is growing incredibly fast. Just 2 weeks ago, it was under 24%. Today, it's over 27%. So the crucial takeaway is that with every new bond, PLAZM's influence grows, and it captures an even bigger slice of trading fees from that external protocol. It's literally making a part of the wider DeFi ecosystem work directly for PLAZM's defense.
So, how does all this ownership translate into a defense mechanism? Well, that brings us to the concept of the perpetual yield machine, how these assets create a sustainable shield for the protocol.
The key word here is real yield. This isn't money being printed out of thin air. We're talking about sustainable income paid in USDC, a stablecoin that's generated from real trading on external exchanges. So as long as people are trading in DeFi, this yield keeps flowing into the vault. So what does that look like today? It's roughly $200 to $350 in real, hard currency flowing into the protocol's defense pools every single day. This is the engine that's constantly reloading the ammunition for defense.
And now we get to the climax of this whole analysis. The single most important insight from the past 2 weeks. It's the direct comparison between the growth of the vault and the cost of its defense.
This slide says it all. During this period of maximum stress, the defense mechanisms spent about $36,000 to support the system, okay? But at the exact same time, the Flywheel generated nearly $120,000 in new treasury assets. The income wasn't just covering the expenses, it was absolutely dwarfing them.
So the bottom line, the crucial point, is this. After accounting for all the defense spending, the vault didn't just break even. It saw net growth of $84,000. The protocol ended its biggest stress test substantially stronger and richer than when it started.
This all leads us to our conclusion. The events of the last 2 weeks have powerfully validated the entire thesis behind the Vault's design, which is all about making the foundation stronger over time. The Vault's role is really multifaceted. It provides that real, sustainable yield for defense. It forms a permanent asset base that only ever grows. It builds that critical ecosystem influence through owning bonds. And maybe most importantly, a rapidly growing treasury signals immense confidence to everyone involved, which, you guessed it, feeds right back into the flywheel.
$120,000, 14 days, 30% growth during the hardest test the protocol has ever faced. This stress test was supposed to drain the treasury. Instead, it became a massive accumulation event. Believers staked, ETH flowed in, bonds were accumulated, and the treasury grew even while it was defending. The flywheel is spinning, the vault is growing, the foundation is strengthening. That's not just surviving, that's thriving.
And to close out, just remember this analysis is based on past performance, and that is absolutely no guarantee of future results. The crypto market is incredibly volatile, so you should never invest more than you're willing to lose, and as always, please do your own research.